Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak podcast. Good morning. It's Tuesday, the 23rd of September. I'm Caroline Hepker in London. Coming up today, Poland's Prime Minister threatens to shoot down Russian jets that enter its territory as Baltic countries raise the alarm over Kremlin provocations. Nvidia announces plans for a $100 billion investment in OpenAI as big tech drives stocks to another record high. Plus, the absolute minimum. Thomas Piketty tells me he believes French proposals for a 2% wealth tax don't go far enough. Let's start with a roundup of our top stories. Across Europe, NATO countries are increasingly sounding the alarm over the threat posed by Putin, following a series of airspace violations. Speaking yesterday, the EU's top diplomat, Kaja Kallas, said Russia is testing us, how far it can go. Estonia's foreign minister, meanwhile, warned that Putin is playing with fire. Lithuania's president went even further, saying Moscow is probing the West's commitment to retaliate. Now, the chorus of warnings came as Prime Minister Donald Tusk declared that Poland is prepared to shoot down foreign aircraft that cross into its territory without authorization.
We are ready for any decision aimed at destroying objects that might pose a threat to us. For example, Russian fighter jets. If they violate, for example, fly over our territorial waters.
Polish Prime Minister Donald Tusk speaking there via a translator after NATO downed Russian drones that crossed into Poland earlier this month. That was followed last week by 3 armed Russian fighter jets entering Estonian airspace for 12 minutes. And while Russia has denied the accusations of breaching European airspace, NATO Secretary-General Mark Rutte will today join the alliance's ambassadors to discuss the recent provocations. Now, Nvidia plans to invest $100 billion in OpenAI in a deal that underlines the booming demand for AI tools like ChatGPT. The tie-up will fund new data centers and infrastructure equipped with Nvidia's advanced chips. Nvidia CEO Jensen Huang discussed the partnership on CNBC.
There's never been an engineering project, a technical project of this complexity and this scale ever. And it really just says that AI was in the early adopter phase in the labs, and finally it's breaking out into just about every single industry, every single use case we can imagine.
In that same interview, OpenAI's CEO Sam Altman says this is critical to everything that they want to do moving forwards.
Without doing this, we cannot deliver the services people want. We can't keep making better models. And now that we really see what's on the near-term horizon of how good the models are getting, the new use cases that are being enabled, what people want to do, this is like the fuel that we need to drive improvement, to drive better models, to drive revenue, everything.
The two men spoke to CNBC to mark the deal, which is the latest and largest in a string of investments by Nvidia. The chip-making giant is using its financial might to make sure its technology remains at the heart of AI tools. Well, the S&P 500 logged its 28th record high this year as Nvidia surged after news of its $100 billion OpenAI partnership. Although doubts are growing about the returns from artificial intelligence, a new report from Bain & Company warns that by 2030, AI firms will need $2 trillion a year in revenue. That's in order to fund data centers and computing power. But their revenues, according to the consulting firm, may fall short by $800 billion. It adds that if scaling trends hold up, AI will strain global supply chains and energy systems. The US demand alone would account for half the projected 200 gigawatts of computing power needed by 2030. Here in the UK, more than 80% of executives at London-listed firms say that they have considered either a secondary listing or moving to a different stock market. The poll of 150 business leaders by broker Deutsche Numis suggests low valuations are still worrying the corporate world. Bloomberg's James Alcock has more.
If 4 in 5 of the people at your birthday said they had thought about leaving, it would be a pretty miserable affair. Numis's annual survey of executives suggests that's the case for the London Stock Exchange. Low valuations are seen as the key factor, but it's not all bad news. New York is seen as losing some of its appeal. 100% of those polled saw London as an attractive venue for IPOs, and nearly all of them thought the government's coming pension reforms would drive growth in the equity market. In London, James Woolcock, Bloomberg Radio.
Fed Governor Stephen Miron says that interest rates should be much lower to avoid economic damage. In his first policy speech since joining the central bank, he argued that the neutral rate has been pushed lower by tariffs, immigration restrictions and tax policy. It's a view that aligns Miron with Donald Trump, who appointed him, but makes him an outlier in terms of US policymakers. Speaking to Bloomberg's Saleha Mohsin, he denied being directly influenced by the president.
He's never asked me to set policy in a specific way. He's never asked me. It's never happened. I view my job as trying to provoke an interesting discussion that will help the FOMC arrive at clear understandings of the way the economy works and where monetary policy should be set.
Stephen Miron speaking there during an event at the Economic Club of New York. He added that he is likely to continue to dissent at future Fed meetings. Until his appointment to the Fed, Miron served as chair of the White House Council of Economic Advisers. He didn't resign from that post, but is taking an unpaid leave of absence. And lastly, Disney says that ABC's Jimmy Kimmel Live will be back on air on Tuesday after a brief suspension. The network pulled the late night show on the 17th of September because of remarks that Kimmel made about the alleged assassination of the conservative activist Charlie Kirk. But despite the return, Bloomberg's Chris Palmieri says questions remain over the presenter's next steps.
There have been discussions at the highest level, we understand, from Disney CEO Bob Iger and Dana Walden, the head of TV, directly with Jimmy Kimmel himself over, what the future would hold. Right now, we don't have any details in terms of what he's going to say on Tuesday, but part of that has, there have been calls from some of the station owners for him to apologize to Charlie Kirk's family, even make a donation.
So that was Bloomberg's Chris Palmieri there in Los Angeles. ABC made the decision to pull Kimmel's program after two station owners, Nexstar and Sinclair, said that they would preempt Kimmel indefinitely. The company says that it has since had, quote, thoughtful conversations with Kimmel, but gave no details on how the show will address the controversy. Jimmy Kimmel's contract with the network runs until 2026. So those are some of our top stories for you this morning. Looking at the markets, Asian stocks still hovering near a record, but struggling to find new propellers. So the CSI 300 is actually down by 1.2%. The Hang Seng's also lower, 1%. The All Country World Index is flat. The MSCI Asia Pacific Index is actually slightly nudging into the red. This after Wall Street's record. Again, the S&P 500 climbing to a fresh record high, 28th for this year. Remember, David Kostin of Goldman Sachs boosted their 3-month price target for the S&P 500 to 6,800 on Friday. So some people do still see more gains. European stocks, though, struggled. The little change at the close yesterday. Stock futures for Europe are up just about 0.1% in the red for the US. Looking at 10-year Treasury yields ahead of the inflation figure that we don't get till Friday, 4.14 for 10-year US Treasury yields. Of course, Hong Kong, though, partly down this morning as the city faces damage from Typhoon Ragasa. So really a very, very damaging typhoon, the worst since 2018. Gold has also hit record highs today. Those are the markets. Now, in a moment, I'm going to bring you the latest on the increasing tensions between Russia and NATO, as well as my conversation with the French economist and author of Capital in the 21st Century, Thomas Piketty, talking about the wealth tax, much discussed in France right now. But before we get into those conversations, another story caught my attention this morning. This is cosmetic procedures that apparently are offering a big result, minimal downtime. Bloomberg's Arvelise Bonilla Ramos has been writing about this, summarising all the many surgical and injectable beauty treatments out there, speaking to 6 dermatologists and plastic surgeons. I just love the breadth of the things that our writers are interested in, and I'm sure that you are too. So she's got the non-invasive, soft wave, M-face, skin boosters, but of course she goes to Botox, still the king of injectables, but she talks a lot about how it's being used in new and different ways. I found it quite kind of fascinating. Also, I am slightly squeamish, so I found it a bit strange too. All the doctors that she spoke to for the article saying, don't confuse minimally invasive and quick recovery times with it being easy. The treatments need someone, with a degree of expertise to perform. But also she points out, just how much more discerning and knowledgeable a lot of users of these treatments are now. Anyway, I thought it was a really interesting story. So I'm going to put a link to it in our show notes so that you can read about all of these weird and wonderful new creations for you. Now, Baltic leaders say that Russia is testing NATO after 3 armed fighter jets entered Estonian airspace last week, and there were the drone incursions into NATO member states, Poland and Romania, earlier this month. So I wanted to discuss this top story this morning, the kind of lurking threat in Europe. Stuart Livingston-Wallace heads Bloomberg's coverage in Greater Russia as well as the Middle East and North Africa, and he joins me today. Stuart, good morning. How would you assess the level of pressure and probing by Vladimir Putin against NATO right now?
Yeah, good morning, Caroline. I mean, it is, I suppose, deeply concerning in some respects, because while, since the war in Ukraine started, we have had the odd missile and drone sort of stray into surrounding territory. I think most people have assumed those sort of mistakes, either, computers were jammed or, mistakes were made. This looks a lot more deliberate and it looks very concerted. And as you say, it's happened so often now that, it can no longer be regarded as a mistake, particularly on the scale that we've seen it. And we look at what the reaction has been. So, for instance, we had Poland's Prime Minister Donald Tusk saying quite recently that this is sort of, in his view, the closest we've come to open conflict since World War II. Now, that may be a slight exaggeration, but I think it gives you a flavour of the deepening concern. And again, what is unprecedented is that you've seen this massed reaction from some of the NATO members, at least, to kind of shore up that eastern flank with this sort of new mission that they have called Eastern Sentry, where you've had, the likes of the UK flying fighter jets into that zone to make it clear, hopefully, to the Russians that there will be consequences if they send masses of drones or their own fighter jets into that airspace. Yeah,
because the response in terms of what it looks like at the moment from Estonia, they don't have great air defences or not substantial ones themselves in place. Is that what I understand from this? And I suppose the question is what may come next, from NATO, from Poland?
I mean, I think the next steps are, they want to see how this new mission is received and whether you get this sort of increasing incidence. But there is an open question mark if Russia continues to do this, either in the existing countries where you've seen these incursions or, a wider spread of NATO members. What exactly is the NATO response? Because at least on paper, you have, as you know, Article 5. Will that action be enforced? And our suspicions are that is kind of what Russia is testing and trying to show may not be worth the paper it's written on. And by that I mean, are the NATO members really prepared to go to war? Should things escalate? And that's not always clear. And particularly with regard to the US, would the US really deploy? Say there was another incursion into Estonian airspace. Again, I think that's what's being tested here. And certainly you've seen sort of the bulk of NATO members very clearly trying to send that signal that absolutely that's what would happen. Now, whether that is successful or not, I guess we'll see over the next few weeks.
Signal, counter-signal and actions. What's the latest then when it comes to, you mentioned the US and their push to pressure Russia over its war in Ukraine, but not directly, rather via third-party countries and what they buy from Russia, oil and LNG?
Yeah, I mean, in short, not terribly successful. So just to sort of, throw a few stats out there. I mean, when you're looking at LNG, for instance, the LNG is still flowing. And based on our reporting from, it was about a week ago or so, out of Asia, it looks like China seems to be setting up a system to import regular cargoes of LNG from from a Russian project, which is the Sakhalin project, that is already sanctioned by the US. On the oil side, again, our reporting would seem to indicate that Russia's crude shipments are at a 3-month high, driven primarily out of the Black Sea, but more widely than that. So at least based on the evidence that we can see now, it doesn't seem to be having much of an impact. Again, that situation can change very quickly. So for instance, if the US decides that it's going to impose much harder secondary sanctions, if it's actually going to enforce them, if it's going to have financial penalties for it, then we may see that change. But based on the data we can see now, it doesn't seem to be a lot of evidence that Russia's energy exports are collapsing.
Okay. Stuart, thank you so much for being with me today. Stuart Livingston-Wallace, who heads our coverage of Greater Russia as well as the Middle East and North Africa. So talking about NATO's response to the airspace incursions into NATO countries here in Europe. Stay with us. More from Bloomberg Daybreak Europe coming up after this. Thomas Piketty is one of the world's most well-known and popular economists. His best-selling book, Capital in the 21st Century, argued for wealth taxes some decade ago to address inequality in society. Now he's been telling me that in France, where his ideas could be put into reality, billionaires should be taxed like anyone else and even be arrested at the airport if they try to avoid paying. We also talked about Rachel Reeves, Elon Musk, and how France escaped its fiscal woes. I began by asking him if he would endorse the proposal from France's socialist lawmakers for a 2% tax on wealthy people in the country.
Oh yes, this is the absolute minimum. I mean, the problem is that it's too small. It's not going to solve given the size of the public debt plus the size of all the new investment that's needed, that will not be sufficient. But yes, that's a useful minimum to start with.
The 2% tax, there's a big debate about how much it's really going to raise. You say that it's inevitable that it has to be done, and if you want to stay in power or be in power in European countries and in France included, you need it. But there's a massive debate about how much annually that 2% wealth tax would actually raise. The high numbers are 15 to 20 billion, but actually as low as 3.8 or below 5 billion a year. You're obviously in the higher camp, but what happens if it raises much less?
The only way you can divide it by 4 from 20 to 5 is if you start from the assumption that, top wealth holders can evade 75% of the tax and there is nothing we can do about it. But, if you start from this assumption, you put yourself, first, this is not a natural law. You cannot say, this is a law coming from the sky. This economic science has told me that the people can escape 75% of the tax. There's nothing you can do about it. But you have to be very careful because when you make this kind of claim, and you pretend you talk in the name of science, of rationality, and you tell people there's just no way we can make these people pay the tax on them. Because everybody agree, let's be very clear in terms of numbers. Everybody agrees that the top 500 wealth holders in France, which are exactly the people who are targeted by the tax, have a total wealth of over 1,000 billion euro, 1,200 billion. So everybody agrees that 2% of this is going to make 2025. So if you want to reduce this tax revenue estimate to 5, if you want to divide it by 4, you have to say in one way or another that, you will be able to tax only 1/4 of the wealth of these people. So you have to make the claim that there's just no way. But then,
if those people leave the country, that's the issue. If the people leave the country,
they can still be liable to the tax.
Yes, so then that's the idea of the 5-year plan. That even if you were to leave France, that you'd still be liable.
It has to be much longer. Yeah, I think the simplest way to do it, in the US, they say, as long as you keep the US citizenship, it's forever. I don't think that's that's one possibility, but I don't think that's the best way. I think a better way to do it is more in proportion to the number of years of residence you've spent in the country. So basically, it's a very simple logic. You've spent your first 50 years in France. You've used French public infrastructure, public education system, public health, public transport, the legal system. How can you accumulate your wealth without the legal system? Then you go 1 year to Switzerland. Okay, that's fine, but you still have to pay 50 first. fraction, close to 95% of the tax that you will be paying if you had stay in France. It's as simple as that. And then if you don't want to pay it, the thing is that it's not as if these people have no relation with France. They have lots of relation with France. They typically own buildings there. They have families there. So if you don't pay it, you put yourself in the same position as anyone who decides not to pay a tax. So, your assets can be frozen. You can be arrested at the airport. That's the life of normal people. Normal people cannot decide that 3/4 of the tax they're supposed to pay, they can do away with it. I mean, you would love to do that. Everybody would love to do that.
Just very briefly, if the 2% tax does happen, consequences for the stock market in France, for bond investors in France, do you think that it will spook markets? Will investors simply swallow it and move forward, or will there be instant reaction? That's, a lot of my listeners are going to be thinking about this. They're investors now, not, in 50 or 100 years' time. They want to, that 2% tax comes in. Would it have no consequence on French stocks, French bonds, the euro?
This is not a very big change as compared to the volume of transaction in general. So, frankly, there are so many other factors that affect asset prices. So, in the long run, this is irrelevant because there are so many other factors that are more important for the prosperity of the economy. How much you invest in education, in infrastructure, do you solve the energy crisis? This is what determines prosperity in the long run. Now, in the short run, lots of things can happen. Some people will say, asset prices, for instance, housing prices are actually too high. So many people, would not complain if they were going down.
10 or 20% or 30% drop in house prices in France would not bother anyone?
Oh, I think in Paris and London, they should go down by 50%. If you want middle class to be able to find housing. So, why do you have such high housing prices in Paris or London? Well, probably because you have too many people with too much money that they don't know what to do with it. So they just drive up the prices for apartments that they don't even use. So, if you can get these prices to go down, that's the best policy you can do to help, normal people access housing. So, don't panic is the general answer. Be cool, look, there's been, again, if I look at my, data in long run perspective, the income scale between, if I, the top 1% and the bottom 10% was, 1 to 100 years ago. It is maybe 1 to 10 today. It has been divided by 10. If you had told that to people 100 years ago, because you already had, business journalists and business people 100 years ago, if you had told them, okay, you're going to have a progressive income tax with, top tax rate going to 50, 60, 70, 80%, size of government going from 10% of GDP to 40%, they would have told you 100 years ago, okay, this is communism, the sky is going to fall, the world is going to disappear, no economic prosperity anymore. What did we have? We had the biggest period of prosperity ever observed in history. So
you need a longer perspective.
Exactly. I'm not impressed by this kind of statement. Yeah.
One last thought. Your ideas, to my mind, confront those of somebody like Elon Musk, the world's richest person, with all of his clout. He wants to influence, as a billionaire, not just a whole host of businesses, but also politics, also the way that people think about the world. And that is the challenge, isn't it? It's how to...
what's interesting is that the billionaire class, so to speak, or say the pro-business class in general, now they know that they cannot stay in power just by having a pro-business discourse, because in fact they lose power very, very soon if they do that. So they need to have this sort of very nationalist, anti-migrant discourse if they want to be in power. Look at Trump, look at, the Conservative Party today in Britain, if they don't get to do something with reform and anti-migrant, etc., it's going to be very difficult just on the basis of a pro-business, a pro-billionaire policy to be elected, just because, for most people this is not very appealing. So the choice is not really between, whether you go for the billionaire most favored policy or because I think people just don't want that. The choice is more and more between sort of nationalism and more sort of egalitarian, universal policy. I like to talk about democratic socialism. Some people prefer to talk about social democracy for the 21st century. That's fine with me as long as we are talking about the same thing. Is this going to be an easy fight? No, because I think the nationalist discourse has a lot of strength also in a way, because this is telling people, look, we don't need this big, complicated international coalition. We don't need, we just need to eat the migrants, to eat the foreigners, to say that we are the best in the world. And if you are a powerful state, particularly in the United States, but to a lesser extent the British state or the French state, you can sort of have the illusion that this nationalist discourse is going to get you somewhere. The reality is that it's not going to get you anywhere. It's in the long run, it's just not going to solve any of the problem. Is that going to solve the climate problem in the US? Is this going to solve the education problem, the housing problem, the health problem? It's not going to solve any problem. So I'm not saying the fight is going to be easy. It's going to be complicated. It's always been complicated. Every political fight in the past, which has driven us to a more equal world, has been very complicated. The creation of National Health Service in Britain, 1945, you would have told that to people 30 years before, 40 years before, they would have told you, no way. The end of the House of Lords budgetary power in 1910, you would have told that 40 years before, no way. It's always been complicated. But what are the alternatives? The nationalist rhetoric, that's not going to solve any of the social problems that they pretend they will solve. But this is a big fight. But the billionaire class, why have they all become so reactionary? Trump, because they know that with a pure pro-business discourse, they actually cannot win. So they have to find something else. And this something else is quite ugly, unfortunately. Sometimes it's working, in the long run it's not good.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.